Listen up, don't get trapped. Gold reclaiming $5,200, it's just a relief bounce, not a macro reversal. Trump's ceasefire rhetoric is pure hopium. As long as oil stays beat, gold simply cannot break out. Price action doesn't lie, just look at the tape from last night. Gold initially pushed past $5,230, looking ready for a massive breakout, right? But then the US session opened and it completely nuked, dumping over $60 in a straight line, sliding right through the $5,200 handle like butter. Think about it, that's a textbook weakness from the bulls. And what was the actual catalyst for this bounce? It was entirely driven by one single headline from Trump on Monday. He claimed that US military operations in Iran would end very soon. Trump folded, causing oil to flash crash from the highs, which gave gold room to grind back up and reclaim $5,200. But now that oil is catching a beat again, gold is getting heavy. Oil and gold are trading like a seesaw right now. Oil dumps, gold pumps. Oil pumps, gold dumps. Why can gold even hold the $5,200 level? It shows the market has absolutely zero conviction. Trump is talking about ceasefires and naval escorts, but Iran's willingness to fight hasn't dropped one beat. They have zero intention of backing down. Most major oil tankers are still too terrified to transit. According to the data, since March 2nd, only 5 to 12 tankers are passing through per day. That's just barely 5% to 10% of normal volume. Oil's massive dump and subsequent stabilization yesterday perfectly reflect this macro tug of war. In this environment, the trajectory for oil is highly likely to play out like this. First, the market believes the dump. Then, it's the SPAC pump. And finally, a forward squeeze higher. And what about gold? In the short term, it is completely trapped in oil's macro logic. So going forward, we have to keep our eyes glued to two metrics to time the actual macro reversal. Number one, watch the US naval escorts and the actual volume of tankers resuming transit. And number two, watch the maritime insurance premiums. Right now, the premium for a single vessel has skyrocketed from $620,000 to $7.5 million. As long as these two factors don't change, any short-term rally in gold is highly likely just a dead cat bounce. Okay, looking at the EPC order flow, there is a massive wall of buying limit orders acting as support around $5,050. This level has been tested multiple times without breaking, making it a major support zone. And upside resistance is sitting near $5,250, where there's a very thick sell wall. If we can cleanly break $5,250, the next supply zone is up around $5,300. If it rejects, expect a pullback to retest lows. Honestly, in this current tape, there are probably no macro trend trades in the short term, but there are plenty of swing trades. If you know how to fade the extremes and trade range-bound swings with leverage, this market is absolute heaven. Looking at the medium term, geopolitical conflicts haven't cooled off, so safe haven demand will keep a floor on the gold. And plus, central banks are still hoarding it. Even though it's being suppressed by oil-driven inflation right now, gold's macro base is incredibly solid. In the mid to long term, the Fed will highly likely to be forced to turn the money printers back on to save the economy. So the bullish macro thesis is fully intact. Don't get shaken out by this current shop. As always, these are just my personal trading views, not financial advice.